Hello and welcome to our series, The London Eye. My guest today on the show is Prashant Kothari, Head of Pictet India Equities. Prashant, thank you very much for taking the time out today. Nice meeting you. How have you read this very nice rally that we've had since the day of the budget in India? But do you think it's justified by fundamentals, or the genesis lay in something more global in nature?
You can't really isolate it easily. Obviously, the emerging markets were rallying at the time India rallied, and also there was more confidence in India after the budget was presented, because there is a lot of skepticism going into the budget as to how the government will kind of meet their fiscal targets and as well as keep up the investment spending which they started last year. The good thing was that they somehow achieved that. There is still a little bit of doubt in terms of how they will eventually meet their fiscal numbers, but I think investors have kind of adjusted to that scenario, saying that yes, government can kind of find its way through. And then we had this good news on monsoons, which also helped to kind of keep up that momentum. And then the general kind of optimism around the emerging markets, with the commodities also going up, with the oil prices going up, is kind of leading us to kind of a feel-good environment, which has obviously helped the markets.
What do you think? Is it a tactical kind of an up move, or is there more to it than that?
We'll only know it in hindsight.
Of course. What's your gut feeling?
There is obviously a fundamental change, right? I mean, when we talk of things like budget, when we talk of things like monsoon, there's obviously some fundamental improvement out there. But the rest of it could be quite tactical. It also depends on how people were positioned into the rally, and maybe they're just trying to cover up their positions as the markets keep on going up. So yeah, a bit of it could be tactical, which could kind of give away in case there is some negative event or news which happens. Yeah.
Do you fear that? I mean, are the risks high this summer of such an event, given that there are so many moving parts of the puzzle, globally speaking, not from an India perspective? Yeah. Do you think we're still vulnerable to those kind of tactical risks?
I think we are. I mean, we might be domestically dependent economy and all that, but we can't deny the fact that the markets are still globally linked, and they are more driven by the foreign money going in and out of the country, and by the sentiment of these foreign investors. So we can't really rule out that possibility that there'll be some global event out there, whether it happens in China when they kind of deleverage, whether it happens right here in UK if there is a Brexit or not a Brexit, or maybe it comes from US where this presidential election is throwing up a lot of surprise out there. So I think there are risks which we have to kind of consider. We can't really be aloof from those risks, even sitting in India, which is more of a closed economy, but still kind of open from the market sides.
Of the three that you mentioned, the risks, what tops your list of worries at night about what could go wrong this year?
In the short term, it is Brexit, because it's so soon. In the medium...
It's not in the price, right? A Brexit?
It is not in the price, yeah, you're right. I mean, the troubling thing out there is that if you were to look at the opinion polls here, they are suggesting that both the Remain as well as the Leave camp are kind of running neck to neck. But the betting markets are suggesting that the Remain camp should have an easy victory. So it's very difficult to figure out which ones do you really believe in. And obviously, the risk that Britain exits the EU and what would be the implications after that are fairly unknown and unpredictable as to what would be those implications. Would there be big slide in the currency market? Would the economy really go for a toss, or would it not? Maybe it will just continue to kind of chug along. So I think it's just the unpredictability of it which kind of makes me nervous, and then its kind of impact on the global markets, and therefore coming to the Indian shores, which is, I would say it is an unlikely event as of now, but still the impact could be high.
What about the other two, between China and the US?
So China is a kind of a long-term macro issue out there, that the leverage in that economy is quite high, and which needs to get corrected at some point of time. And whenever it does, then there will be a shock to the global economy. I don't know when it really manifests itself. The US presidential election, Again, it's a very tough one to call out which way it would go. But yeah, it is certainly a risk in the next kind of 6-9 months when that event really happens. And yeah, you will see impact not just on kind of Indian exporters who are out there making their incomes in US, but also in terms of how the investors view the world thereafter, in terms of what would be the economic repercussions of that election really are.
Sure. How confident are you feeling after the earnings season which has gone by in India? Because for the first time we've seen some recovery in revenues. Maybe we are all getting too excited about nothing, but do you get the sense that this is the turning point in earnings, or would you want to see more evidence of that?
So yeah, this quarter was interesting because after I think maybe 5 or 6 quarters of earnings declines, we are finally seeing a quarter where we are seeing earnings growth happening in India, and which had to happen at some point of time, right? Only the timing was an issue, because with your GDP growing at whatever you believe 5, 6, 7, 8% numbers, your earnings should be growing for the corporates in India, and which has eventually started to happen. My sense is yes, it could be the turning point, because earnings should naturally grow, and having earnings decline in an economy which is growing at that rate was actually the unnatural phase of it. So yes, this should be the inflection point, and maybe the next few coming quarters would kind of prove that thesis.
So how are you playing this recovery? If you're saying earnings have bottomed out and this is an inflection point, is it time to get into industrial recovery plays, capex related, or you want to wait for that to happen and would rather be on the consumer end of the market now?
Honestly, we are much more bottom-up driven than just trying to place themes like that, thinking that the macro is turning this way or that way, and therefore we should be positioned like that. We just look at the individual stories and try to figure out which are the stocks which are kind of looking the most attractive in terms of their business fundamentals, in terms of their valuations, irrespective of our views on the macro side. I mean, we'll obviously have that as a backdrop, but largely our holdings would be kind of more driven by what we think about individual businesses. So it might happen that I'm very negative about a sector from a top-down perspective, but still, because these stocks are so cheap that they're factoring all that pessimism in it, therefore I'll be overweight upon it. So yeah, the views and the positions therefore might look very different, and therefore it would be wrong to kind of make conclusions out of that.
Okay, I'll talk about some of your sector flavors, but before that, do you think monetary policy is a tailwind this year for the market, or do you think most of it is played out? You shouldn't expect too much from the RBI.
If you're talking about rate cuts, I think yeah, we are largely done out there. Maybe there's another 25 or 50 basis points cut, but yeah, even that looks difficult, simply because the inflationary winds are kind of starting to catch up again. You've seen commodity prices going up, you're seeing the food prices going up. If monsoons are good, and many people believe that monsoons would be deflationary for food prices, our opinion is a bit different. We say that monsoons will actually lead to higher rural incomes, and that will lead to inflationary pressures in the economy. So I think there are already many reasons to believe that inflation has kind of bottomed out, and if that is so, then it is difficult to believe that rates can really go down a lot from here on.
Is the RBI governor's reappointment an issue at all for the market?
We make too much of it, honestly. I think, see, he has done definitely a great job in terms of managing the monetary as well as the banking framework for India. But I think we try to attribute a lot to personalities rather than institutions, rather than the underlying structures in which they operate. So I think even if he goes, I mean, which would be honestly, personally, a sad event, because he has done such a great job out there. I don't think things will really melt down just because he is not there. I'm sure we'll be able to find some nice central bank governor again. As RBI, I mean, we have been blessed with nice, good governors at central bank for last many years, last many decades, right? So I don't think it would really turn very ugly even if he goes. And there will obviously be some sentimental impact on the markets for the short term. Markets will take time to kind of adjust to whosoever is the new person, what his kind of thoughts are in terms of how to drive the monetary policy going forward. But over a period of time, I mean, it's the underlying economy, it's the underlying structure of the country which kind of takes over. Central bankers can only do so much, right? I mean, it's quite ironical that it is Mr. Rajan who has been continuously saying that central bankers around the world have been given too much importance, that they can't be driving growth by themselves. And even then, in India, we believe that if he goes away, then somehow growth in India will not really come. It is quite ironical out there.
I take your point on that. I know you'll answer this by saying that you don't follow the index and tactical calls are difficult, but do you think the February lows that we saw, it's now with the knowledge that earnings are beginning to pick up and the world seems to have stabilized a bit, it's unlikely that we'll see those levels again? Or given the situation of the world, you will not make a prediction like that?
I mean, if you can underwrite that the situation remains the same as today, yeah. Yeah. I mean, nobody knows that, right? So I think it is kind of useless to make those predictions. It is better to kind of trying to understand what is really priced into the market today and what is not. And as you said, there are some risks out there which are not priced in, and therefore we have to be wary of those risks. And yeah, I would say that on the balance, maybe the valuations are kind of reasonable. There are some stocks out there which are kind of pricing in more euphoria than the fundamental improvement out there. And therefore, we, as stock pickers, would always be cautious about venturing into those stories, those stocks, even though the fundamentals might look good today. But who knows what happens a month down the line, right? And therefore, when we really look at the market, when we really look at the stocks, this is what we have to discover as to where the fundamentals are kind of disconnected with the price which the market is offering us. And this is what allows us to take bets either way.
We'll take a quick break now. Back in a minute with Prashant Kothari. Don't go away.